All right, let's crack a beer. Let's talk about the epic Peloton cash secure put debacle of 2021. The time I thought I was going to make all of the money, should have lost a ton of money, but I didn't because I know what I'm doing. And comes up in my Discord all the time, like, Brad, what the hell's going on here? So I just wanted to take some time, bring it. It's still going on. There'll be another update video. But guys, I really want to show you what to do when you get yourself in trouble in a cash secure put situation or even a covered call position, because I'm deep in Peloton right now. So it all started on a groggy Friday morning. I'm laying in bed from the night before. I hear the phone ring. I reach over, I grab it. It's JJ Buckner. I push the asshole button and put the phone back down and go to sleep. A minute later, my phone rings again. This must be something important. So I pick up the phone. I'm like, hello? He's like, Brad, are you seeing Peloton? I'm like, no, what's going on? He's like, stock's crashing. Premiums are juicy right now. I said, premiums? Tell me more. So I sprung out of bed, ran down the stairs, got to my computer as fast as humanly possible to start writing cash secure puts on Peloton. Overnight, the price had dropped from $86 all the way down to $55.60. And I pretty much found out about it in between there. I think when I found out about it, I think it was like at like $57. So I'm like, yes, I am going to write some puts and I am going to make money. Guys, when a stock is just crashing down like that, buyers are scooping up puts, and that makes it really, really good premiums for the seller. Not only knew Peloton was overvalued, but the drop and the kick that they took after earnings, I could have never expected this. So here's kind of like the thought process, and we'll break down each one of the trades every single time I've rolled it, how much money I've made each time, and how you can protect yourself if you get caught in a situation where you write a put and the stock just plummets. I mean, way below your strike price, to the point where you can't even recover, write calls against it, and get any money back. You are surely just purely bag holding. All right, let's look at this. Okay, so right down here is where it all begins. On November 5th. So this was a Friday, like I just mentioned, and I was like, oh my gosh, I am going to write this put. Like I said, I think it was at like $57. So I wrote this put right here. It had an expiration of the following week. Okay, so this was 1 week away. It was a $54 put. Now, in my mind, I'm like, they just got hit so bad. You could see it was straight down. They got hit so bad. I'm like, how much further could it really go? Like, we've seen Peloton go through essentially killing people with their treadmills, recalls, terrible news. It's never done something like this before. And frankly, the earnings weren't that bad. So I'm like, it can't keep going down that much, right? Oh, I was wrong. So what happened was I wrote that one and I was so excited. I'm like, I'm going to write one for that day and I'm going to collect another $40. Now this one right here, this $40 put, this one did expire. Worthless. So out of this whole old ordeal, I've only guaranteed myself plus $40. So this 11.5, I'm going to just start keeping a tally here so you can see. And I'm not going to add this in with everything else. You'll see in a little bit. But this got me a premium of $40. Not too shabby. Even that for Peloton was really, really good. And this one right here, I also wrote an 11.5. This got me the same premium of $179. Now I'm thinking to myself, I really am thinking to myself, this is going to reach the media, this huge sell-off. It's going to go back up. This thing's going to expire worthless by Tuesday. I'm going to buy to close this thing for 75%, and that's going to be that. And I was like, okay. Well, going into next week, it was not any better. On November 5th, I had to come in and I had to make some moves, and I had to make a 2-order option. So what a 2-order option really is this was me having to roll. So essentially what happened is this $179 premium, okay, as I wanted this to go to zero. What happened was the value jumped all the way up to $532, and the share price was down in the $50 range, which means with my strike price of 54, I was also at a $400 capital loss. This was a complete disaster for me. And here's where being able to roll your option and knowing how to do this is so important, okay? Because as of the 9th, where this thing was going to expire in a couple days, and I just saw it going down and down, I was going to lose the $400 in capital gains, and that was pretty much going to be it, right? The value was this. That wasn't going to hurt me. I knew that I was going to have to sell at the strike, but I knew that at $54, when it was currently trading for $50 and showing no signs of bouncing back, that I was going to be bag holding for $400, and I did not want that, okay? So what I did is I bought to close, and I did this all at the same time. You could do them at different times. It doesn't really matter. But at the same exact time, I bought to close. And what that did on 11/9 is that was at a minus $532. So now without this one up here, because this was a separate option. So now I'm left with a minus 353 net premium. But what I did at the same time is I sold another call, and I was able to also lower my strike at a greater price than what I just had to pay. So at the same time, I wrote one and I got $537 back. So I was able to roll this down in strike price, which released $50 of collateral for me, which was awesome. And I still got myself $5 more credit. So at the end of all of this transaction, at the end of my first roll, I had a net of $184 from this initial 179. So essentially I got a little bit more money, but now the expiration had been pushed out even further. So I went down in strike, but I went out in expiration. So now what this does is gives a little bit more time for Peloton to rebound and get its head out of its rear end. Hi. Hey, it's Brad from the future. So I'm editing this. I realized that in all my excitement, I talked about what I did, but I didn't really show you how to do it, which would have been ridiculous. So let me show you just one. They're all the same. Let me just show you one. So here, for example, is a CCL $20 put. Right now, it's not going well. 1863. Let's say I wanted to get out of this. Maybe expiration was a little bit closer. Here's what I'm going to do. I'm going to go to View Options. Now, I'm going to find the option that I have. So you have to go to your expiration. This expiration's down here in March. I click this March, and I look for put. Right now, I have a sold put. There it is. Now, because I sold this put, what I'm going to want to do is I look at what the current value is, $320, and I look at this strike. So this is a -1, which means I sold it. So to close that, what we need to do is we need to press the plus button. This should be on your app or the desktop. So that means I'm going to buy to close this. That's going to cost me $320. Then what I'm going to do is I'm going to say I want to roll this out, possibly the same expiration. If I can lower the expiration, that'd be even better. I'm going to go out another month. So a month later, I look and see that at the same strike, I can sell a put for $350, getting me a total credit. Now, spreads can be a little bit difficult. Remember, don't think about this as a premium move so much. Think about it as a bettering position through time kind of move. If we can lower our strike, that's great. If we can get a little bit premium, that's great too. But oftentimes these spreads are going to be harder to fill. So I'm going to be completely honest. Right now, what the market price is giving me is 30. This is going to be a credit. To be honest, what I would probably do is I would probably give up a couple bucks, maybe go to 0.15, and I'd review the order then. So I give up $10, right, to move it another month for the stock to do what I want. But the process is going to be the same every single time. I'll show you one more. Here's Peloton. Okay, this is currently what I have for March. The spoiler alert for the end of the video, my bad. But if I go here, I'm going to go to the put side, right? Because you're not going to see that -1 or that +1. And I'm going to look out here once again to my expiration of March. Then I'll see my -1 here. Right now, to buy to close that put, I have to pay $865. So then I'm going to go to the sell put side and I'm going to say, how do I break even on $865? Right now, I can do that. I can make another $60 if I do this. So this would be a great way to push it out. Same strike. The total credit's 60. Maybe I'll go down to 40 to get it filled a little quicker. That's what I do. All right. So now back to what I did with Peloton, and now you know. Cheers. We see I tried a little bit later on to make another. This got canceled, but what happened is it kept on going down. Okay. It was going down, it was up. It was definitely fluctuating in this week, but I did not want to take any chances. And I think at the end of this week, when I closed it now, we did another 2-option order on the 16th. I think it was trading at like $53, $54. It was right on the cusp, and I did not want to mess with it. So now here's the next thing I did. Another buy to close. So that was -465. Then I got another buy at $490. That netted me another $25. Now, I did have to keep the same strike. So when I'm rolling, the first thing I'm looking at, guys, here's the education. The first thing I'm looking at is I'm going to have to pay $465 to close this. I'm going to go out a week in expiration and see if I can lower the strike and get at least this or more back. If I can't, I'm just going to stay at the same strike. And I'm not really looking to raise up my strike in this situation, right? Because I'm trying to come down to where Peloton tanked to. So if I couldn't get more than 465 at 53.50, I was probably going to go out one more week in expiration, but I got lucky and I got 490. So at the end of this November 16th day, I was now netting a positive 209. So as we can see, this is a situation where I should have got slapped. I should have got annihilated, but I got this, and then it went up again, and it went up again. And the reason I kept collecting more premium, and while doing that, I even released $50 in premium, is because I knew how to roll, and you really should know how to do this. But that was this one right here, November 16th. Guys, I didn't take my eye off the ball. Like I said, it was going all over the place. And what happened was the stock price started to go up. So the values of the option, the value of the option that I just bought, it went down, which is a good thing. And I saw a great opportunity for me to lower my strike. This is one of those things where I could have hoped it kept going and got to break even and got the hell out of there. But once I said I wasn't that confident, but I did know that what happened in a matter of minutes, essentially, it went from 490, right? This was the premium I collected on that last option. It dropped down to 234. So I was like, this is sweet. I'm going to have to pay 234. I can get 253, but look at this. I'm going to release myself another $100 in collateral. And as I mentioned on that last one, I was willing to go out to 12.3 anyway. So this just worked out. So what I had to do now is I had to go minus 234, and then I added back 253. That got me another $19, and I was up now to $228 of net premium on this particular operation. And I released another $100 of premium. Up here, I think I released 50 somewhere, so I'll just put up here, released 50. So we could see at the end of the day, everything that's happened. On the next day, like I said, the stock price was still all over again. I tried a couple more 2-option orders to see if I could get it filled, but I wasn't able to do another one until November 24th. And this day on November 24th, the share price, it closed just under $44, $43.92. We can see this was actually a pretty nice move. I got $103. What I did was I bought to close at $52.50, okay? And I had to pay $882. I lowered it to 51, but guys, this 103, this was a debit, okay? I lost money in this, and what happened was I was willing to eat away at what I was currently up over here. I was willing to eat away at that to lower that strike price down because this was showing no signs of coming back up. So now I'm thinking, all right, let's get into damage control mode. Let's shrink the difference between the share price and the current strike price because I have a little float of net premium so much right now. So I'm okay with that. It's not that big of a deal for me. So this was actually on 11/24. This was a debit of minus 103, which left me now with $125 in net premium. So that's the first time I gave up some premium. But now look at this. I released $150 of collateral. So at this point now, I've lowered myself $200 worth of collateral. Okay, so that means I've lowered the strike price by $2 whole, and I'm still up. It's about a month out. This is a lot of work, but guys, I'm not bag holding on that original $400 that I should have been. And here's essentially, guys, where the saga ends for now. December 6th, I think this video is going to come out. I had to buy to close this one at $8.53, but I got $8.70 back, another $17. And I'm like, guys, I'm not willing to deal with this. It shows no sign of bouncing back. So I just pushed this out until March. I'm going to put it on the back burner and I'm not going to think about it. Guys, if you want me to do another update when like this actually comes to fruition, let me know and I'll do so. But I got $17, so that's not too bad. That brings me up to $142 net. This is what I'm netting right now. I dropped down a ton here. So I released $600 of premium by going from a 51 strike and a 54 strike. And that's kind of where it is right now. It was at $53 to close right now. And guys, if this bounces back up, I am setting myself up to be in a really good position. But essentially, guys, I'm kind of over this right now. So during this time, I'm pretty much going to be watching. If this thing ever gets to a value of 142, I'm probably going to close it, break even on it. It's not that going to be that big of a deal. But if it keeps going down, guys, this is going to be the process. And you can do this on the call side or the put side. So with this $45 strike, that means my collateral right now is $4,500, right? The price for 100 shares. And I'm at $142 in net premium. Guys, that's roughly like 3%. And if I add this $40 into that, that makes it a little bit sweeter. That makes it $182. Okay, that makes it closer to 4%. And this is about a third of a year, okay, that if this expires in March, that'll be about a third of the year. So this is still like a 12% return. I could turn what should have been a disaster into a 12% return, and that is the goal. Like I said, if you want me to follow up on this, guys, please let me know in the comments to let you guys know how this closed, how this ended up, or leave in the comments if this was the stupidest video you've ever seen and you never want to see it again. I hope it did help, guys. Roll your options, roll down, roll out, roll whatever you need to do. If you have any follow-ups, definitely leave them down in the comments below or jump in the Discord, because this is the type of stuff that we're talking about every single day. Until I see you guys in the next one, stay positive, work really, really hard, always please be kind to other people. Hope you have yourself an amazing day and an even better tomorrow.